Joining us now is Drew Pettit, Citi Director of U.S. Equity Strategy. Great to have you here on set. So, in the context of today's okay moves, we're kind of at some highs. You're saying it would take a full correction in the S&P, I believe, like a 10% pullback to 4,500 to make you feel like doing anything more aggressive than buying occasional pullbacks?
Yeah, look, I just don't think you chase at this point. Look, a lot of news is getting priced. A lot of good news is getting priced in. We are actually trading up, even though reporting season really hasn't been great. We really haven't had a lot of broad beats and broad raises. So we have a lot of people just kind of adjusting estimates on the fringes and so on. So kind of through that, enjoy the ride in equities right now. Just wait for a better time if you want to be more aggressive.
Now, you say there are some themes for 2024 that you're looking for in equities: AI, digital leisure, experiential commerce, fintech among them. Which of these themes is the least stretched valuation-wise already?
Probably experiential commerce, to be honest with you, because I know we've had some better retail numbers. People feel better about the consumer in the U.S., but there really isn't a lot of expectations built in there. It's not this big growthy trade. Again, it's more of a value trade. So I think that one, and also infrastructure and fossil fuels. We do think we're underinvested there. There's some tailwinds, but again, it's the value, it's the cyclical side of the trade. We think there's a lot more leverage there in those plays as the market rally kind of broadens out.
Interesting. I just want to go back to what you had to say about the market and stocks in general trading up. Why do you think that's been the case, even though earnings maybe hasn't been that fabulous? And given the fact that you have a market that's pricing in just under 80 basis points of easing now for 2024, which is half of what was expected to start the year.
Yeah, so it's the beats. So I understand we don't really have the raises to go with it like we've seen in some other quarters. But with rates a little bit higher, the cure-all for now has been to really pull forward some cash flows. Maybe pull forward's not really the way to explain this properly, but it's just improving the near-term cash flows. So if we're thinking about just the old DCF math that we all did in school, time value and money is a pain when rates go up, except if your cash flows go up too.
Okay. So when you talk about some of these cyclical trades, what does it say about where we are in this economic cycle as well? And I asked that on a day where we've had some pretty sloppy numbers. Durable goods not looking so great. I realize maybe some noise from Boeing, weak Boeing orders there. But in general, it's been a little bit of a mixed picture, at least for January, maybe in the midst of weather.
Yeah, so here's where the micro comes in. So I get there's macro headwinds, but we're thinking about the S&P 500 companies, like the big cyclicals of the world, the market leaders. We are talking a lot about AI and how it helps businesses and all these advancements and how it's really going to help you manage. But there's other tech improvements and other just general business improvements that are making cyclicals less cyclical. So even if we have a bit of a slowdown from here, I just don't think we appreciate the story and how much better corporate America's gotten through really good up cycles and, some slowdown, some softness too.
So back to your experiential commerce comment, we've got eBay coming out, which is not, I guess, experiential, at least not. It hasn't been having a good experience as a stock anyway. Where do you draw the lines in that? How much of that crosses into what we see Walmart trying to do, right, with what they're doing in digital and Vizio?
Yeah, so actually it's funny. Something like e-commerce does fall into our experiential commerce. Maybe it's kind of the lack of experience when I just want to buy something now rather than, wade through a store, chase my kids around, all that fun stuff. But honestly, I think experiential commerce outside of e-commerce taking share and continuing to take share and then buying experiences over things. This is where the cruises play in. So we highlight something like CCL on our recommended list. I think if we do have consumer softness, people are going to narrow into what they like to do and how they like to shop. So when we're thinking about playing the consumer, when we're playing that side of cyclicals, I think you play the structural trends there.